Yesterday, I got a question about how to identify trends, market structure, and the overall flow and the momentum of the price. So I decided to make a very quick video talking about these exact subjects. Honestly, it's not that hard to see what is actually happening with the price. As a trader, especially if you're a day trader, you always want to follow the momentum and the general price flow instead of trying to catch a reversal. Trying to trade against momentum usually makes things much harder than they need to be. And identifying the current momentum is really not that difficult once you know what to look for. One of the biggest things to focus on is the previous higher time frame high points. If those high points keep getting broken, it is usually means the price flow is moving upwards. And if these major low points are being protected and not getting taken out, that already tells you a lot. At that point, you are starting to see the full story of the market is giving you. So what exactly is that story telling us? If the price is moving from one point to a higher point, first of all, that shows the strength and power from the buyers. When this is happening, and the old highs keep getting broken, it clearly means you have a trend in the place. And if the most of the lows are being protected and the price is not even touching them, this is another strong buyer protection signal. So once you have a clear high time frame flow and a solid trend confirmation, all you really need to do next is focus on the lower time frames. Basically, what you want to do is apply the same exact idea on the lower time frames, like old highs getting broken and the price continuing to make new highs, while price is also moving up on the lower time frame. So this way you are confirming both the higher and lower time frames and keeping them in harmony with each other. At the end of the day, it doesn't really matter because price is generally either crashing or rallying anyway. If price is rallying, you want to wait for a strong and clear breaks to upside. And if the price is crashing, you would want to wait for a strong and clear breaks to the downside. After that, the next step is simply to follow the exact same process again on the lower time frames. So what you are doing here is combining the higher and lower time frames into the same flow and the same trend and the same overall direction. By doing this, you naturally increase your probability and your overall statistics of taking winning trades. For example, if you look at Bitcoin over the last couple of weeks, what you see here is actually pretty simple. Price was taking a significant loss to the downside, and it was crashing from around 95k down towards the 70 and 60k. So there is a clear price decline happening here. And when I do this, I'm not obsessed with exact lows at all. I'm simply looking at whether the major lows on this chart are getting taken out or not. While all of this happening, if you look at the high points, you can see that generally they are being protected. Now here is my question, and it's a very simple one. Who has a better chance of winning right now on this chart? The short traders or the long traders? Which side clearly has the better odds and probability at this moment? I think the answer is pretty obvious here. If the price is crashing, making new lower lows while the highs are still being protected, it makes much more sense to look for a short trades instead of long trades. This is not an opinion at all, it is simply based on statistics and probability in the data. So when you drop down to the lower time frames, you follow the exact same idea here. You wait for the lower time structure to shift downward as well. To avoid fake moves and false signals, you may want to wait for a couple of breaks to the downside instead of a single break. Ideally, you want to see 2 or 3 clear breaks of the structure moving downwards. By doing this, you are confirming 2 important things here. You are confirming that the high time frame and the low time frame structures are both strong and moving together. When the flow is aligned and moving in sync in the same direction, this will dramatically increase your chances of winning trades. Okay, folks, have a nice and chilling day. Do not overdo it. See you next time, and please take care of yourself. Completed the free trading course but still need more? My master classes teach liquidity, imbalance, and the market structure in detail. Combine them with forward and reverse trading using momentum superboxes and yo-yo cost average entry models. After that, you will master scalping with a one-screen free trading view indicator, a revolutionary trading system. Finally, you will learn to invest your profits using my 10-year swing investing with working agent system. Interested? Please see the video description.